Good morning and welcome to this 8th episode of ICC Crack the Wellness Code Wellness Support Group. Thanks for being with us for all the past sessions this year. And today we are taking up a topic which is not only interesting, but it's something to do with all of us. And we go by our usual format where we're going to have 3 community participants talk to us very openly what they feel. Some of them are financial professionals, some of them have a business perspective, or they have also going to talk about their own lifestyle and how they relate mind-body wellness with financial wellness. And that's the core theme of this session today. And you can see that's what we're going to address is the what, why, and how, and most importantly, how do we set goals in sync with one's wellness journey? That's an important thing that we're going to tackle. And as you know, we covered 360-degree wellness, and we look at various aspects of wellness. And today the focus is going to be on financial wellness, and we are here all to bond, share, and connect with each other and see how we can address this aspect of wellness in our wellness journey. So without much ado, I would like to invite our first community participant, Vandana, first coming up. She's a finance professional in South San Francisco Bay Area, and I will give it to her to tell you more about herself and how she relates financial wellness to her journey of mind body wellness. So over to you, Vandana, and look forward to hearing your story.
Yeah, good morning, everybody. Yeah, my name is Vandana Sheel, and I'm a finance and accounting professional. I have an MBA and also a bachelor's in economics and political science. I'm looking into getting my CPA certification so I can, bridge some gap here and get some foundational knowledge. But more than that, my experience is more in the large Fortune 500 companies. I worked there for over 20 years, both as an individual contributor and in the leadership capacity. So when Sachin asked me to kind of talk about in the financial wellness, I was kind of thinking about it, and what this means to me is more in terms of a overall big pie, and financial wellness is one segment of it. I definitely view this in terms of mind as a fallout, once we have the other parts in balance. So today I just wanted to, touch upon some basics which we all try to follow in our lives, but the concept of financial wellness is very, broad, and we think of it in terms of current and future, and we bring in past in terms of what we've learned from the past and how do we handle today and tomorrow. There's spending, there's earning, there's planning, and so forth. But I wanted to just stop at that, and a lot of the financial wellness is also to do with the solutions, and it's I don't see it as a one size fit all solution. There's unique to each individual, and so I'm kind of going in between my own philosophy and the learnings and the knowledge from finance, but I'll leave this for later on, in the Q&A, but that's what I just wanted to share today with all of you. Thank you.
Thank you, Vandana. What a wonderful start of today's session. Thanks for joining us, and I'm sure you'll have more to contribute as we go into the question answer session later today. So thank you for that. May I now invite Nushin to share his story Once again, thanks for being part of this session of Crack the Wellness Code. And I'm sure you, as a business person with 5 decades almost of experience, have a lot to tell us how to crack the financial wellness code alongside our wellness journey. So over to you, Naseem.
Thank you for inviting me. I'm delighted to join this webinar on financial wellness. My name is Nushin Mavadat, and I've been in the export-import business for nearly 50 years. Today's topic, financial wellness, is a topic with very wide ramifications. While it is an important goal for each one of us to achieve financial wellness, but it is not a final destination. It's a component of a well-lived life, a life with purpose and meaning. We could start by creating a spiritual context, a spiritual dimension, and ask ourselves, how can we have a spiritual life in the materialistic world? And in consequence, what should be our views on financial matters and financial wellness? To quote Matthew 16, what will it profit a man to gain the whole world, yet lose his soul? We cannot avoid the ups and downs of the world, but we can attempt to be more resilient and become better decision makers on a personal level, as well as help create a better, safer, more peaceful community around us. Lasting financial wellness cannot be achieved in a vacuum. To a great extent, it depends on creating a safer environment at all levels of society. Going back to the mundane, it's surprising that very few people follow these 3 basic financial wellness recommendations. 1, paying off debts in a timely manner. 2, budgeting. And 3, living within one's means and setting aside savings for retirement. The question is, how can we remedy this low level of financial knowledge and behavior? 2 hurdles need to be overcome for all humanity to learn financial literacy. First, we need to increase the general level of knowledge about financial affairs. And second, we need to increase the desire to learn. Of those who shun financial matters, spiritual people might be at the forefront. But it does not have to be that way. In its proper context, religion or spirituality does not oppose wealth or financial security. In fact, wealth is encouraged, providing it is used to achieve spiritual goals and not selfish desires. According to the Baha'i writings, wealth is praiseworthy in the highest degree. It is if it is acquired by an individual's own efforts and the grace of God in commerce, agriculture, art, and industry, and if it be expended for philanthropic purposes. So generally, the Baha'i teachings recommend a spiritual solution to the world's economic problems that goes beyond materialistic considerations and envision a unified future state of society where everyone will prosper. There will be a readjustment in the economic conditions of mankind so that in the future, there will not be the abnormally rich nor the abject poor. The rich will enjoy the privilege of this new economic condition, as well as the poor will enjoy, safety. In other words, the rich will enjoy his palace and the poor will have his comfortable cottage. The Baha'i teachings have answers, and those answers focus on engaging in productive work, practicing economy, and paying off debts. Every person must have an occupation, a trade, or a craft, so that he may carry other people's burdens and not himself be a burden to others. The Baha'i teachings ask us to avoid the lure of riches and be content with what we have. It says, O son of being, busy not thyself with this world, for with fire we test the gold, and with gold we test our servants. So in conclusion, to achieve long-term financial wellness, my suggestion would be twofold. On the one hand, for each one of us to consider our own financial literacy. On the other, reflect and work on our own personal spiritual growth and discipline. It consists of bridging material and spiritual pursuits. By placing spiritual values at the heart of our transactions, we are making a long-term investment, not only in ourselves, but also in those around us. This investment must eventually pay material as well as spiritual dividends, as trust is created between people and balance is restored between the creation, distribution, and utilization of material wealth. It will help create long-term financial wellness. Thank you.
Thank you, Nusin. I think that was a very wide-ranging coverage, and we like to hear more of you during the question answer session. So once again, thanks. And let's go to our next speaker, which is Shaila Gupte, another finance professional, very seasoned, and she has looked at the financial wellness of women very specifically, and that's where she would like to focus. And of course, we'll also hear about her own story and her own, take on, how financial wellness matters in our wellness journey. So over to you, Shaila.
Hello, good morning. My name is Shaila. I worked at the credit union for 20 plus years. I work in the investment department. And today I would like to start my session with an interesting, funny, but true story. We all love to hear stories. So when I was working at the credit union in the investment department, we used to have seminars once a month. We decided to do this investment seminar for women only. And we did the online registration. About 75, little more than 75 women registered. We were excited to have so many women. And the funny part was, we wanted to attract so many women. We decided to do something different and special for these women. We offered manicure, pedicure, and a facial before the seminar. And I think that was the main reason more than 75 women registered for the seminar. Guess what? On the seminar day, all 75 women showed up. Again, we were excited. Our speaker was also excited. She had ordered investment books for the seminar. We distributed the books, but we made one big mistake. And the mistake was, we did the manicure, pedicure, and facial before the seminar. Believe it or not, after they had their manicure, pedicure, and facial, only 5 women left for the seminar. We had to donate all those books, and the seminar was done only for five women. The point today I want to share with you, all women especially, men, no offense, you are my friends, but today I would like to give my special message to women because I worked in the investment department and I worked with 4 senior advisors. I used to sit on their appointments because I was helping them with their other paperwork and all that. And I noticed that women generally don't take much interest in investment. I know it is a dry subject, and especially women, they feel that taking care of the family, taking care of household chores is the main responsibility. And somehow investment is not that interesting and they put that aside. I remember one day one 32 or 35-year-old lady came to meet with our one of the financial advisor. She came because she had changed her job, and she wanted to invest her 401k. She wanted to roll over her 401k, and that's the reason she made an appointment to meet with a financial advisor. She came in, the investment advisors talked to her. She explained her what are the different investments she can invest into. She asked her, what are your goals and all that. And at the end, the investment advisor asked her, so what would you like to do? Do you think, is this the good investment for you, or is this? She goes, well, I don't know. Let me go home, talk to my husband, and then he will decide. Today, my message to all women, I would say I'm going to give you 4 points. One is get involved in your investment accounts. Please ask questions, find out why we are doing this investment, why we are not doing, what is the purpose. The second is meet with your financial advisor. If your husband has a financial advisor, go with him for all the appointments. Because what happens if you haven't meet your financial advisor, and if time comes and if you have to meet with him, you will be surprised that sometimes women don't know what to ask. They don't know what is going on with their investment. Sometimes there is a personality clash also. I will give you another example. One lady came in, and I think that was the first time she was meeting with the financial advisor, because her husband passed away and she wanted to know what was going on. So she came in, and somehow she was very sensitive about strong colognes. And this investment advisor, he was used to wear strong colognes. I mean, even we used to tell him that, your cologne is too strong. Anyway, as soon as she came, somehow she just didn't like the whole atmosphere. She didn't like that smell of the cologne, and she said, no, I will come some other time. And she never showed up. Finally, I called her, found out what was the reason, and then we assigned her a different financial advisor. So what I'm trying to say is, please get to know, if you have a financial advisor, get to know him. The third would be, do not have too many accounts all over the place, because when time comes, it is hard to gather all the information. And sometimes regarding the investment account, it is cheaper to have more accounts under one umbrella, because there is they call it a break point. What that means is, when you have certain amount, the expense ratio is more than what if you have less amount invested. So I would say, do not have too many accounts all over the place. The fourth will be, keep all the paperwork in safe place, especially the original paperwork. What happens if you have a long-term insurance or life insurance policy, annuities? These are long-term investment. And the carrier of these accounts or the carrier of these investments may change. And if you don't have the right number, right policy account number, the beneficiary information, you may have hard time to get back all your money. It did happen. So I would say 4 things would be: get involved in your financial account, meet with your financial advisor, get to know him, get to know her. Do not have too many accounts all over the place. It's better to have it limited, so you will be able to handle it properly if time comes. And keep all the paperwork in safe place. And I would say the third would be, or the fifth would be, get interested, ask questions, don't be shy. And because it happened to me when my husband passed away, somehow I wasn't that much involved, but at least I knew what questions to ask. So it wasn't that bad. but I wish I had put more interest into our investment accounts. And last but not least, having your well-being is most important. Don't If you have enough money to retire, enjoy your retirement. If you can afford, you can hire a financial advisor, because sometimes they say what you pay is what you get.
Mhm.
If you find somebody who is giving you a free advice, that might not be the right advice for you.
That's very useful, Shaila. I think we will, have more questions for you during the question answer session. But the 4 points and even the 5th point are well noted. And, also the way you summarized, that whatever you do, it should be, finally aligned with your overall wellness and well-being. And that's what Dr. Amit Gupta is going to talk about, in his presentation, as today's guest speaker. He's a very amazing background. We are really, really thankful to him for making time, because he has seen and done a lot, and he is looking at it from a very different angle. And primarily, he's trying to relate financial wellness with his overall wellness journey. And I think this is something that resonates extremely well with a lot of us. It's not just about the managing, and because they're all very important, managing and getting information, taking the right decision. We're in Silicon Valley, a lot of smart people, but then and Amit is truly smart, no question. But there are dimensions that he's presenting here, which I think is extremely thought-provoking, with a lot of take-home points. And then, of course, rest for you to pose questions, interact with him. So take it away, Amit, over to you.
Welcome, everyone. Thank you so much for the really, really kind words. So this is the agenda that I set up for this discussion today. So a little bit about myself first. So background, software engineer, studied at IIT Delhi, came to the US, worked as a software engineer for many years, but for the last couple of decades, I've been an entrepreneur. The first question I'd ask you is, what are you afraid of? Can I have somebody volunteer your thoughts, please?
I would say, will I have enough money for retirement?
Sure. So that's a very good question. Will I run out of money before I die, right? What other questions do you have? What are the concerns? Because ultimately we're driven by our emotions more than anything else. And fear is a very, very powerful emotion. And so some of the common things I hear about is, will I run out of money? As Shaila just said, will I be able to retire? Will I leave something behind for my family and my life? And will my family be able to manage it if something bad happens to me? Those are all really important questions that we need to kind of think about and answer. But before we go there, let me ask a different question. So clearly, all of these questions, in principle, you can answer by saying, yes, I can do it as long as I have enough money. So how do you make money? So let's say win the lottery. What happens? So another question, does winning the lottery make you happy? Any guesses, any thoughts?
Yes and no.
All right, elaborate, please.
Yes, because yes, you have a lot of money, but then sometimes if you never had that money, you may get nervous breakdown and you don't know how to handle that part of money.
Very good point. So it turns out that the researchers that have studied this, and I will put a link in the chat in just a minute. So they studied happiness level of people. And like any other good study, they basically divide people into two groups, the lottery winners, the not lottery winners, and they measure the happiness level. And it turns out that winning a lottery only leads to a very, very short-term increase in happiness. And within 1 year, the lottery winners, their level of happiness gets back to the same level as the people that never won the lottery. So think about this, with the lottery, which you think of as this massive, you'll always be happy. It doesn't really create happiness or financial security or that notion of well-being for more than 1 year. So clearly winning the lottery, good as it may sound, is not the answer, right? So I'm just putting the link on the chat. So that's the study if you want to take a further look. Right. So the other thing also is that for most of us, when you think of what it means to be financially well off, surveys are shown to put that threshold at roughly 2 to 3 times their current wealth. And this basically ends up being a never-ending journey. We make $100, we think $300 will make you happy. Make 300, the number goes up to 1,000, and it just keeps going and going up. And so ultimately, the way I think about it is that what matters more is the relationship to money and how you perceive it, how you think about it. And I think, as Naseem said, one of the key things is whether what you're doing is not necessarily what you're earning more, whether what you're spending is within the limits of what you have. And that's actually far more important than anything else. But probably the more important thing is that you have to think about money, not just in terms of what it does for you, but also what it does for loved ones. And I think Shala started talking about that. So is what happens if something bad happens to you? Will your family members be in a good place? Will they be taken care of? Will they have good record keeping so that they can actually get access to the money that they will need to carry on with their lives? And this happens in the other direction also, and it's sometimes culturally considered insensitive to think about, but you also have to think about what happens if your partner, something bad happens to your partner. Will you be able to take care of things? Will you know enough to know where the records are? Will you know how to talk to the financial advisor? And for all of this stuff, my belief is it's better to plan and to make work. And the more you plan, the less worry you have to do when the time comes. So essentially, at some level, you have to spend your brain power one way or the other. And you're much better off spending the brain power by planning ahead instead of worrying about money. And in some sense, the best measure of financial wellness is how much time and effort you spend worrying about money versus planning. So that's at least my personal belief. And with that said, I can walk through at least what my personal choices are. And so it's my belief that what you do in almost every aspect of life, and definitely when it comes to finances, it has to match with how you think, what your personality is, and how you react to different things. So in my case, there's a strong sense of loss aversion. And also the second thing that's important for me is I don't want to spend too much time worrying about learning new stuff just for the sake of the finances. Now, I do believe it's important to plan, and there's some things that I enjoy, and I do spend a lot of time and effort on that. But for the most part, I would rather not have to think about the money or worry about, for example, let's say if I have some stock and that company performs poorly and their kind of stock price falls down, then I know that that would stress me out a lot. So what I have decided to do as a matter of kind of protecting myself against that is I don't invest in individual stocks. Second thing is the time horizon. So a time horizon also dictates what choices you can make. And in particular, if you have a short time horizon, then by definition, you have to take choices that are less risky and that are more liquid. And the kind of assets we talk about, like our cash, our bonds, and those kinds of instruments that can be liquidated quickly and that are not as high risk, although their average rewards also returns tend to be lower. And the third aspect of my decision making is I'm also limited by what I know and what I can kind of want to learn about. And this will come more when you talk about this. For example, real estate is a really, really good place for a lot of people. A lot of people have invested very successfully in real estate. And I think it's good. But it requires you to spend a lot of time and effort in understanding what it takes to be a successful real estate investor. And it's my belief that in any market, you have dabblers and you have the people who are truly, truly working hard or truly, truly investing. And the people who are putting in the effort, they will in general do far better than people who are dabbling. So I'm putting my money into something, then I don't want to dabble. Then it's something that I want to really, really understand and really, really get into. And then only then should I be investing my money. Otherwise, I'm likely to lose to the people who are putting in more of the effort. So that's kind of part of my philosophy. So as a result of that, what I've done, so the top 3 lines show the factors that go into my decision making. The next 3 are the items that I basically am personally invested in. And so for most of it, it's basically fairly boring. But in my mind, boring is all good because I don't have time. I don't want to spend too much time managing this part. Now, if on the other hand, your personality is such that you enjoy doing this, you like doing this, then go ahead, work with the new stocks, work with the new stuff that makes sense to you. So, but for that as background, so my own personal thing is mostly index funds. Simple, straightforward, low expense ratio, keep the money, forget about it, and then let it grow on its own. Second is a small subset of target retirement funds, kind of similar in behavior to index funds for the most part, mostly passively managed. And so that's that part. And the third is something that I personally like a lot, and I have not seen too many people do. So I call startup indices. So essentially, I come from the startup world. And so the reality is that the venture capital world, the returns have tended to be significantly higher than the returns of public markets. And the good thing is that the venture capital market, which is traditionally closed off individual investors, is actually a lot more accessible now. But what happens is, like anything else, you have risk and reward go hand in hand. So angel startups tend to be extremely risky. And I don't believe people should be investing in individual startups unless you have the time and the effort and inclination to do the homework needed to do well there. The reality is that the vast majority of startups fail and they lose the investor money itself. It's a very popular vehicle for a large number of startups, and they have their own essentially index fund equivalents that you can invest in. And that's also another thing that I personally have been very happy with. So that's the third thing. Now, the bottom 3 lines are 3 other areas that I believe can be the right fit for a large number of users, a large number of people, but not for me, primarily because of what I like and what I'm interested in working on, and also what I know. So as one data point, crypto, I think is fascinating. It has potential to be massive, but I do believe that you need to do your homework, and I have not done it, and I'm not interested enough to do it, so that's a straight away. Similar thing for real estate. The third is life insurance and annuities. I think they make a lot of sense for a lot of people. But it's a question of who you are, what life stage you are at, what you're counting on. So especially if you are somewhat younger person who has many, say, multiple decades of working like ahead of you, then I do believe life insurance makes a ton of sense to protect your family. But on the other hand, if you are basically retired or retiring, then I believe that life insurance is not quite as meaningful. So depending on your life circumstances, you may decide to choose it or not to choose it. Similarly, annuities make a lot of sense for people that just want to have the peace of mind of knowing a particular revenue stream is going to come back. But my general dislike of annuities is that the rate of returns tends to be low. And so I would rather not do that. I'd rather just buy a separate life insurance and separately invest money into an index fund and get a much better return out of it. But that's just my own personal feeling. And if you prefer to simplify everything, then annuities are great for that too. Make sense so far? Okay, I'm not getting any feedback, so I'll assume we'll come to that in Q&A section. So the next point is that something to keep in mind. So are people familiar with the story from Leo Tolstoy called How Much Land Does a Man Need? So this was one of the stories that we learned growing up in school, and always kind of in the back of mind. And the basic story for the people that haven't heard it is that there's this person who gets this really great deal from a community, from a tribe, where they say, look, you just have to basically run around from sundown to sunset. And if you can complete a rectangle, then whatever is within that rectangle, whatever the area that you complete, all that land will be yours for one single fixed price. But if you don't complete the circle or the square or whatever shape you're doing, then you get nothing and you lose your money. So this guy starts at sundown, runs and runs and runs, and gets greedy and he tries to run harder and harder and harder, trying to cover more and more area. The net is that he basically gets sick, he falls down, and he essentially falls just short of getting the mark. And in the end, he gets buried by the people. And the moral of the story is that in the end, he just needed 6 feet of land. That's all he needed. So that's what he's going to retire on. So ultimately, the reality is that we all have essentially only a finite amount of time in this world. And we can do far better instead of focusing on how much wealth we can accumulate, to focus on what we can do to help the world, to make things better in the world, to leave the world a better place, knowing that we'll go out the same way we came in without any of the money that we make in the process. So that's kind of my final thought on this.
Thanks, Amit. This is such a balanced approach. I just can't think of anything better. Till question up, I would request Nusin, who had almost 5 decades of experience in business, extremely successful there. At the same time, he's taken to spirituality, and I think he had, he practiced some dictum, so I would definitely like Nusin to react, and also like to see the 2 very profound slides. But all the slides are excellent. This is just fantastic, very thought-provoking, and it's so original thinking. So the 2 things that, among other things that Nusin that you can address is, how do you sort of look at the last slide, which is so telling, and so philosophical, and the very, very informative balanced slides, which had those tiles, right, which gives you the options: my personality, time horizon, what I know, index funds, target, retirement, startup indices, crypto, real estate, and life insurance. So how do you sort of reconcile, and what kind of thought process and action items one could evolve, along with one's wellness journey? So that's what I thought would be very interesting to hear from Nusin. Yeah.
I really appreciate your presentation because it has so many dimensions, and I think we live in a very in a world that we are so interconnected, and we cannot separate one people from another, or even business people, scientific people, and so on. We are all really need to have a global view of things because there is so many uncertainties. And so I'm wondering, how would you create this bridge between what is our spiritual pursuits in life and financial pursuits? Because at the end of the day, we need to have a sense of satisfaction as to who we are and what is the purpose of our life.
Anything, Amit, that you want to know?
I think it is a good point. And so ultimately, I think that we have to kind of step away from the extremes. And so the purpose of the money is fundamentally so you can lead the life that you want to live outside. Making money cannot be the end goal of the life. And so ultimately, the money is just a means to ensure that you have the resources to do what else you want to do. And that's where you should need to focus on life, and to just have enough money that you don't have to worry about that becoming a problem and you're being able to do what you want to do outside. So that's actually how I think about it.
Yes.
Great. Shaila, you had quite a few kind of points. I outlined some steps based on your experience. So how do you think that aligns with the overall scheme of things, all the presentations that we had so far?
Yes. So I would say having, they say health is wealth, but also having sufficient money is also a wealth, because if you don't have enough money, your mind, body, spirit won't be in peace. So I would say don't go after a lot of money, but have enough where you can have a good life and you can enjoy your life. So money is not everything, but money is needed to have a good health and spirit and body.
Over to you, Vandana. You have a very vast experience. You've worked with Fortune companies, and you've seen, various facets of financial wellness and the dynamics, that play into our lives, right? So, what is your take, and how do you sort of align, your journey, with your experience and all some of the experience that the other participants, speakers have shared?
The connection between spirituality and financial wellness is very intertwined. I think what we tend to do is we just amass a lot of wealth, and then we don't know what to do with it. But some sense of that bridge combining, we need money to live, to survive, but how much do we need? And I think once, if we have that spiritual centering to ourselves, we can start making that connection of how much is enough, and the saying that goes that to spread the wealth around. How do you help the community? How do you bring others in alignment with that purpose that you have for yourself?
I like Sheila talked about the women becoming more involved. And I think for the last century or so, we are starting to see the components of feminine ideas and basically the participation of the women all around the world to become more involved in decision-making. Hopefully, this will also influence peace and war, or the lack of war and more peace in the world, because women have a different concept about security, and it's like the two wings of a bird, man and woman, being each part of one entity, but the balance between contributions from the men and the women, will create a new world. And I think in the financial matters also, that's a very important new development for the last century or so, that the women of the world are starting gradually, very slowly, to take their place, their rightful place in decision-making, not only in financial matters, but maybe political or any important matters that concerns the environment. So I think that's a very important point, that we have to help develop more confidence in the women to step forward and bring their input into it.
Yeah, very good point. So just one thing to add, yes, I think Sheila is a really good point about making sure that you and your partner both know what's happening with your money and both have the ability to track what's going on. So one thing that I've done is, between myself and my wife, we have one separate mailbox that's a shared mailbox. And every single thing that's important to document for future, we also send a copy there. That makes sure that if something, God forbid, happens to one of us, that becomes a common repository that we can all go to afterwards to get to the key documents that we need to access. Something like that may also be useful for some of our audience members.
We have some of our regular participants, and it's good to hear from them. Just going around calling names. So any of you would like to speak, Baljit or Gayatri or, Pushpa or, Yogendra, anybody, just raise your hand and we'll go to you and hear you. We have two questions in the question answer box in the meantime, by Geeta Sheshadri. Interesting questions. The first is, how much is enough, right? So that's the first one. And the second one is, what should a retired single senior woman have to live, should the person have to live in Bay Area? I think what she wants to know, what is a benchmark kind of either number or, asset base or resources. And let's put it resources. Let's not say number, we don't have to put a dollar amount to it, because your network can be a resource. A lot of people don't understand, and I think they appreciate, because this whole Crack the Wellness Code, I mean, it's an ecosystem, right? There's a network. That's a big resource, So and we have so many seniors, even, children, we do youth program, and they are looking for something or the other to as a pocket money while they're studying, so that's a network, right? So I would say resources, right? And then just dollar numbers. So these are two questions. Just repeat, how much is enough, and what should a retired single woman have to live in the Bay Area? So we can go in rounds and you can just chime in. So let's start with Amit. Yeah.
So good question. And I think the reality is that the answer will depend a lot on your own situation. And in particular, if you think of the Bay Area, the classic challenges is housing. Housing is super, super expensive. So it depends on if you own your own house, the number is going to be dramatically different than if you have to rent. And then it's also a question of what other regular expenses are. And so if you have a good visibility into that, that's absolutely wonderful. Otherwise, the standard rule of thumb that I've heard, I think Shaila and Vandana can also chime in on this, is that take your regular expenses pre-retirement, cut them down to 70-75%. And that's the starting ballpark of what you should expect to spend in a steady state during your retirement years. The other thing to remember is that, and this is the unfortunate factor of life, and this is also kind of where it all comes together, is ultimately there's a lot more spending that goes on in healthcare related items than anything else. Everything else is very predictable. Healthcare costs are massively, massively unpredictable. So how healthy you are, how you take care of your body during these years will make a far bigger difference in terms of how much money you need than anything else. That's at least my opinion. Thoughts?
Great. Vandana, Nusin, and Shaila, anything that you want to chime in on those two aspects?
In the Bay Area, it's as we just heard, housing is the most expensive, and also healthcare, but really is whether you have any extended family or people who can take care of you or assist you. But if you're really by yourself, that's a very big challenge if you have to hire people to come and help you. I think that's a big issue here in the Bay Area because wages are so high and so on. But it's probably a very desirable place to live, but at the same time, the most expensive. So the question is whether someone would be willing to move to a less expensive area.
Let's go to the question. So we wanted to have Pushpa, right? Pushpa ji, is that?
Good morning, everyone. That session was very informative, very good and interesting. And I agree 100% with Shaila that women always should take interest in financing. I've been taking care of my finances since 76. And I did a lot of wonders, I can say. But every woman. And then other thing, when you invest, try to find out research about the company, how the growth is. Okay, just don't believe their words in seminars. So please be careful before you put your money, invest your money, find out the growth, what is going on. So research about that. And then check about the maintenance fee. Some of them are very hidden maintenance fees are. I have invested places where no maintenance fees are at all. Another thing, don't put all the money at one place because like they say, don't put all the eggs in one basket. So you have to have, Another thing, what I feel that, whatever your monthly expenses are, please, for at least for 10 years, you should have in your accounts. This is your safety net, whatever your monthly expenses are, so that you don't have to worry. So that way, you have to see what's happening. And second thing, find out that which company, where the money is growing. Because with me, I want to work the money for me. I have worked for money for a long time, but now my goal is money has to work for me. That's the way I feel. Thank you.
Well said. Let's go to Geeta, that's the next
Yeah. So that was,
observation or
yeah.
question. And yeah. So go ahead, please. Yeah.
Yeah, thank you. It was very informative. So I have been, ever since I came here in the 98, listening to financial programs and trying to invest, but they said, put it in this Roth or this and that, but they don't say exactly where to invest it. There's no guarantee. So, so I'm also willing to move up, but as you say, resources are good here. We have a network of friends and other, like you all, the strength since COVID. So moving away from here is another, the problem is the loss of friends and starting all over again. That's the issue I have. So, so maybe some suggestion as to where it's closer to this place, and then we can still maintain the connections, something like that from one of you. And also if there's any.
Great, but be tuned with CWC. We are always bonded. Okay, you see, we meet every Saturday, so you're going to meet all the time people, right, for suggestion. Okay, and then we have more than 60 events going around the year. We have support group. We have support group for chronic illness. Maybe you can find somebody in the support group, other support groups as well. And we are growing. And the other thing is that we are very global. So even if you have assets in other country, or you have networks in other country which can contribute to your financial wellness, it's possible. We are a global organization now, right? We started in San Francisco Bay Area. We're going global. We have a strong presence in India. There are people from 20 countries who are. So there are a lot of ways of actually learning the tricks and relating it to what you are looking for. Yeah.
Okay, can I have some input from any of you on the panel today? So for more advice, is it possible?
So I'm not sure I caught it. Talking about the advice specifically in terms of housing or something else?
No, financial advice, like where to put my money so I get a steady income, because everybody advises annuities, and annuities, as Pushpaji said, come in with a lot of hidden charges and other caveats. So I'm not sure what to do.
Very good point. And so unfortunately, the reality is that there's no kind of free lunch.
Yes.
So every single thing has some downside or the other. And so it's something you have to do your homework, but more importantly, you have to tie it to what your horizon is. And so if you think of your money, you basically can think of it into like two sections. One is the money you need today. Second is the money you need possibly in the next 3 to 5 years if something bad happens. Let's say there's a loss of job or something happens. And then there's the money that you kind of feel comfortable not going to touch for the next 5 years at least. And those are 3 different time horizons for which you need to do 3 different things. Money that you're comfortable not going to touch for a long time, that's a long time horizon window. And that's where, if you're, so my personal belief is, if you're not willing to put in the work, then the best thing is just put in a massively diversified portfolio, which you classically get with index funds, ETFs, and the like.
Okay.
Because that just insulates you, but again, it doesn't get you the best return possible. So as a one data point, not that I recommend this, if you had invested a bunch of money into Tesla a year ago, it has done remarkably well. But there's no reason to believe it'll actually do the same next year also. So you have a lot more volatility and a lot more risk when you go to into stocks. Now, and I've been inside the companies also. So I've been inside companies that were publicly traded. The reality is that nobody really knows how well a stock is going to do. There are studies that have shown that even insiders that trade, most of them, they actually do more poorly than somebody who just held on to the stock, period. Most insider sales. Now think about this. These are people that are the CEOs and CFOs of the companies. Even they can't forecast the value of their stock. Even they lose money when they transact in the shares. So to imagine that somebody outside will be able to predict with any reasonable accuracy, I don't think that's reasonable. And so one belief is keep it in, and then for the first 2 buckets, for the first one, I believe you need to have it in cash. Any money that you need in the next 5 to 6 months, it needs to be in cash or super liquid securities, money market funds and all, that's great. Well, the stuff that's in the middle, you have a little bit more leeway, and that's where you can kind of play around with a few more variables. So at least that's how I think about it, my 3 different time horizons. But again,
Any other takes? Yeah, this is a very personal question again, very personal
Sure.
question. Any other
Thank
takes?
you.
Because, yeah, and it's very risky to give financial advice in a forum like this.
Like,
But we can only give you the choices and tips because, and it can be one-to-one. You can always have a
Yes.
one-to-one. But
That's what I
in a
want to
forum
know.
like this, yeah.
The
Maybe
contacts, if I
anybody, so anybody interested can get in touch with you, one-on-one basis, and Sachin and I can facilitate, one-to-one, but that's not part of the CWC forum as such, but it's going to be a very personal thing. Yeah.
Oh, thank you.
Thank you. Thanks. Yeah, so we passed time, and thanks for everybody for staying back all along. So, it was a great session, and Pushpa has already, put a text message there. So, she can be contacted if you think, and I think at a one-on-one base, like for instance, Shaila, you have a long, experience and you're trying to help women, right?
Yes.
So if there's anything that, you can connect on a one-on-one basis,
Sure.
at a personal level, you are most welcome to do that. Because our forums are definitely networking forums, but there are certain things that we do and using our platform. There's certain things that we don't do our platform, but the platform can be used for various other, means where, ultimately, if you benefit out of it, we are happy. Yeah. So thanks for being with us.